Hello and welcome back to the Art of Finance. This is a series where I'll be documenting my dividend stocks and shares portfolio on a monthly basis. I'd also be releasing videos on relevant investment advice and life-changing actions that can transform your life so you could get the best out of everything. This is the first month where I got paid out dividend. I'm quite excited to see my first dividend payout, and it's not bad. Isn't it amazing to see your investment grow visually and see it working for you? Here in my Vanguard account, you can see that I got paid out £10.99 from my S&P 500 ETF, which is actually not too bad, considering that you get paid on a quarterly basis. So I'll be getting paid this times 4, which is pretty much £44 annually, and this is just from the S&P 500. I also have shares in the Footsie 100 index fund, where I would also be receiving dividends, but I haven't received anything just as of yet. Now, key difference I did want to quickly point out is that I have bought into an Footsie 100 index fund unit trust accumulation. Now, what that means is that any dividends that I will receive will automatically get reinvested into the Footsie 100 index fund unit, meaning that I don't even have to think about me putting my money back into it because it'll be already done for me. A key thing about this is basically automating your finances. Automating your finances is such a key thing and makes life so easy. Now, considering this ETF dividends that I've just got being paid out for, I would now have to go back in and reinvest it. And now it's a bit of an extra step. For people who, like me, that want efficiency, the best route is to go through an index fund with an accumulation. Sometimes this isn't available, like the S&P 500 ETF, which is a big key difference. So I did want to just point that out so that everybody knows some of the key differences between an index fund and an ETF. In a later video I will be discussing the key differences between it, but I thought a lot of people don't really know about this one, so I thought I'd quickly give you a heads up. So for those of you who don't know what dividends is, it's essentially free money that a company gives you when they receive their reports. By you being an investor in them, they give a little bit back to you. So it's sort of like a give and take, and it also helps them to also sell their shares while you also get a bit of help back. I will create an in-depth video about dividends. For those of you that don't know what dividends is, no worries, I'll quickly go over it and explain what dividends is. Getting dividends is really important, and it's even more important on how you utilize it. You get paid out this free money, and you could spend it on pleasure, such as a couple of pints to designer clothing. I mean, you deserve it, right? Optimizing your finances so that you receive an additional income source. Yes, but there's more to it. Reinvesting your dividends back into your portfolio is the key to see maximum yield from your portfolio. It's basically the snowball effect. The more you put back into it, the bigger and bigger it will grow. And this is key when reinvesting your dividends. Now imagine you reinvest your quarterly dividend that goes back into the index fund, which allows you to buy more shares. Now that you have more shares, you'll get paid out more dividends. So over a couple of years, your portfolio grows and grows, dividends upon dividends. The cycle goes on, and your gains will be much larger than if you was to just spend it. So that's basically a quick rundown of what dividends is and how it can be utilized to your benefit. Now if we go over to my Trading 212 account, we can see that I also have topped up my account in terms of the shares bought of my Coca-Cola stock, and I've also received my dividends from Coca-Cola, £4.47. This is much lower in comparison to my S&P 500, but you also got to remember that I have more equity invested in the S&P 500, and it is far more diverse compared to an individual Coca-Cola stock. Coca-Cola is a good company to get into as they pay dividends over a long period of time. This is one of the key aspects that you could take a look at a company to tell if the company is worth investing in. Here in the UK and in the United States, the markets have been very rough due to the coronavirus. In the UK and the United States, there has been an ease on the lockdown during the last few weeks, Any sane person will know this isn't a good idea, as the cure hasn't been found yet or is not under control. In the UK and the US, we have seen insane spikes of the coronavirus cases due to the ease of lockdown. It looks like we're going to have a second wave, and this has hit the stock markets quite significantly. I have seen my Coca-Cola stock drop to the peaks of minus £35, which is crazy. But please do not panic sell. This is a tough time for everyone, let alone investors that have invested thousands of pounds in the stock market. Do not let your emotions control your actions. Money has the ability to control your actions, but it is your job to tame it and manage it wisely. It is now time to stick to your guns and ride the wave, just like in 2008 market crash. 1 year after the crash, every stock skyrocketed and stabilized. We have a similar situation now, and if you wanted to get into the stock market, it is the best time to invest, as all stocks are basically on a sale. Remember your long-term goals and keep on investing. You can only see and evaluate your fruitful results over a long period of time. Remind yourself what your long-term goals are and stick to your game plan. Remember, we're in this for the dividends, and we're not too worried about if it goes up or down. We're a 5-year period until we decide on selling it. So this was a quick update on my account. I hope you have learned something. If you want to get started, I also have a link in the description for my Trading 212 account where you could get free stocks up to £100. Please like, comment and subscribe. Peace. This has been the Art of Finance.